Last month's US Nonfarm Payrolls report exceeded expectations and showed strong job growth. However, the optimism surrounding the labor market quickly faded as Trump's reciprocal tariff package continued to fuel fresh concerns in the financial markets. Federal Reserve Chair Jerome Powell raised warnings about the potential inflationary impact of these tariffs. The key question now is, where is the US economy heading? Will these headwinds trigger a recession, or will the US remain resilient? The April NFP report could hold the answer. The upcoming data will be released on May 2nd ending at 3:30 p.m. GMT3. Stay until the end of this video to get expert predictions on the April NFP and key trading opportunities surrounding the release. Before we dive in, don't forget to hit the subscribe and notification buttons to stay updated with the latest trading insights. Looking back at March, the NFP report was a positive surprise, with the US economy adding 228,000 new jobs, far surpassing market expectations. On the other hand, the unemployment rate edged up slightly to 4.2%, which was in line with the market forecast. Wage growth, however, came in slightly below expectations, with average hourly earnings rising by 0.3% month-over-month and 3.8% year-over-year. The market's response to the strong NFP data was overshadowed by President Trump's tariff announcements. Shortly after the release, the US dollar index rebounded slightly from its previous downward trend, while gold prices dropped, only to surge later to an all-time high amid escalating trade tensions between the US and China. Meanwhile, crude oil extended its losses, driven by growing demand concerns and increasing supply from OPEC. The three major US stock indexes also continued to slide, weighed down by fears of a worsening trade war. To trade around the NFP release, watching the forecast numbers is crucial for anticipating major market moves in Forex, commodities, and stocks. For this month, the market is expecting 130,000 jobs to be added, with the unemployment rate expected to remain at 4.2%. On the other hand, wages will likely grow steadily, with average hourly earnings increasing by 0.3% month-over-month and 3.9% year-over-year. Now, let's break down the potential trading opportunities for three key assets that could see high volatility. Stick around until the end to find out some exciting trading ideas. The US dollar index is currently hovering between 99.0 and 100.2 ahead of the April Nonfarm Payrolls report. Strong job growth could push Treasury yields higher and strengthen the dollar, while weak data might increase expectations of a rate cut and put bearish pressure on the dollar. On the technical side, resistance levels are at 100.71 and 101.40, while support levels at 98.57 and 97.91. Gold is currently consolidating ahead of the NFP report. Its movement will be influenced by real yields, expectations from the Federal Reserve, and market sentiment. Strong job data could boost Treasury yields and the dollar, raising the opportunity cost of holding gold, which could push prices lower. On the other hand, weak data might raise recession concerns, potentially supporting gold. Gold is holding above 3,246 US dollar, with a potential rebound toward the 3,438 US dollar to 3,500 US dollar resistance zone if that level holds. However, a drop below 3,246 US dollar could lead to a correction toward 3,164 US dollar or even 3,100 US dollar. Last, let's talk about the S&P 500. Strong jobs data might ease recession concerns and boost earnings sentiment, but it could delay Fed rate cuts and affect stocks that are sensitive to liquidity. A weak report could initially hurt market confidence, but may also reinforce expectations for Fed monetary policy easing. After a recent rebound, the S&P 500 index is consolidating around the 5,500 level, with key support at 5,356 and resistance at 5,694. A breakout above 5,694 could lead to levels between 5,803 and 5,955. Overall, investors remain cautiously optimistic. A solid but not overheating jobs report could support further gains, while major disappointments might lead to more risk aversion. The above recommendations are only for your reference and should not be considered trading advice. If you find this video helpful, let us know below and remember to like and share. Don't forget to click the subscribe and notification buttons to keep up with the market updates. See you next month.